The stock market is currently closed for the weekend, with the most recent regular trading session having ended on Friday, August 7th, 2026. NVIDIA closed that session at $223.96 per share, registering a gain of $4.97, or approximately 2.27% on the day. Trading volume topped 105 million shares, signaling robust institutional participation into the closing bell. While retail investors are looking at this upward tick as proof that the semiconductor rally is running on full momentum, the real activity in NVIDIA stock is taking place behind the scenes in corporate infrastructure and high-volume order flows. Most retail accounts using a standard individual brokerage or popular retail platforms see a steady push toward previous highs and assume it is just another standard tech run. But if you analyze the order flow across major platforms like Fidelity Investments, SoFi, or Interactive Brokers, you notice that institutional funds are making structural adjustments to how they hold semiconductor exposure. The market is pricing in an endless demand curve for enterprise compute power, yet the true pressure point over the coming quarters is not compute capacity itself, it is power generation, grid access, and multi-billion-dollar infrastructure commitments required to keep massive data centers running continuously. Expectations across financial media suggest that every major technology client will simply keep buying hardware regardless of physical constraints. The reality facing the market is far more nuanced. While retail investors check their mobile apps daily to monitor simple price moves, major capital management firms are tracking how hardware deployments intersect with local energy grids and corporate balance sheets. For anyone managing an intelligent portfolio, navigating Robinhood stock trading, or using Schwab Intelligent Portfolios to balance tech exposure, the narrative around tech giants often gets reduced to simple headlines. The reality is that institutional capital is looking past the current quarter's delivery stats and measuring how long cloud providers can maintain massive capital expenditure plans before power limitations slow down physical deployment. If you look at recent trading behavior, NVIDIA stock has shown elevated daily swings with higher lows forming over the past several sessions. The movement past $223 reflects strong buyer absorption whenever dips occur, but the surrounding volume profile tells us that institutional accumulation is becoming much more selective. While platforms like SoFi Invest or SoFi Active Investing make it easy for retail buyers to grab fractional shares on every small pullback, institutional desks trading on Interactive Brokers platform are paying close attention to broader macroeconomic pressures. Rising interest rate volatility, sector-wide capital shifts, and supply chain updates across primary assembly partners are all playing a role in how the broader market values high-growth technology assets. Comment below how many shares of NVIDIA stock you currently hold in your portfolio and whether you are holding long-term or trading short-term swings. Understanding why NVIDIA stock trades at these levels requires taking a look at its core operations and enterprise ecosystem. NVIDIA Corporation is the global leader in visual computing, accelerated computing architectures, and artificial intelligence hardware and software solutions. The company operates through primary business segments including data center, gaming, professional visualization, and automotive. Its data center segment produces high-performance graphics processing units, advanced network interconnects, and comprehensive software stacks designed to power large-scale enterprise workloads and accelerated data centers. Its hardware architectures, combined with proprietary computing platform software, have made its hardware the industry standard for complex model training, scientific research, and enterprise workload processing. Additionally, the company maintains a foundational presence in consumer graphics, producing discrete processing units for personal computers, workstation visualization tools, and automotive system-on-chip solutions. Over past financial cycles, NVIDIA evolved from a specialized manufacturer of personal computer graphics hardware into the dominant engine of enterprise computing infrastructure. Its earlier financial reports established a history of rapid margin expansion whenever new microarchitecture generations transitioned from production into full market distribution. Historically, hardware cycles followed consumer spending trends and personal computer upgrade timelines. Today, the business model relies heavily on long-term enterprise capital expenditure allocations from cloud infrastructure providers, global hyperscalers, sovereign entities, and large-scale digital platforms. Revenue generation has shifted from individual unit sales toward full-stack hardware and software infrastructure solutions, where proprietary software integrations create high retention rates among global enterprise clients. Looking ahead, the market is evaluating several key catalysts and structural risks that will determine whether NVIDIA stock can maintain its upward trajectory. The primary catalyst over the next several quarters centers on the execution and delivery schedules of next-generation hardware platforms across major cloud infrastructure clients. As global data center operators ramp up their capital budgets, any supply chain disruption or manufacturing bottleneck could cause temporary shifts in quarterly revenue distribution. Furthermore, physical data center expansion is increasingly constrained by local power generation and electrical grid capacity, making power infrastructure partnerships and localized energy sourcing critical factors for sustained deployment momentum. Another critical factor involves competitive pressure across the broader semiconductor sector. As alternative hardware developers refine their proprietary enterprise chips and custom internal hardware, cloud providers may diversify their infrastructure investments over time to manage cost profiles. Investors managing their holdings through a Fidelity brokerage, Robinhood app, SoFi trading platform, or Interactive Brokers account must balance these competitive realities against NVIDIA's deep software integration and performance advantages. The key variable is whether market expectations regarding capital expenditure growth will match the real-world timelines of physical data center construction, power grid availability, and client monetization strategies over the next 12 to 24 months. In summary, the ongoing narrative surrounding NVIDIA stock highlights a clear gap between baseline market expectations and complex structural realities. While general retail market sentiment often treats semiconductor performance as a simple reflection of headline demand, institutional market participants are evaluating the stock based on power delivery pipelines, infrastructure build-out speeds, and long-term capital efficiency across enterprise customers. The close at $223.96 demonstrates ongoing strength in market demand, but long-term value creation will ultimately depend on how effectively the broader technology ecosystem resolves real-world infrastructure constraints to keep expanding enterprise compute capacity.